Hi there, Serial Trader here. Let's check in with the major US markets. So on SPX here on the candlestick chart, today we slightly, on an intraday basis, went below that Fibonacci 61.8% retracement of this leg up since early April. But largely rejecting those lower prices, well, on a closing basis, certainly rejecting them. And really, we're just kind of still dancing around that 618 area. So it's still showing support in that Fibonacci zone. And as of today's close, we sort of put in a bullish hammer. So that's illustrated by this very long lower shadow and then this small real body. And again, it just graphically kind of looks like a long-handled hammer with a hammerhead. So that is a bullish reversal candlestick signal, although I wouldn't put too much weight in it yet. Okay, it's as we are still on a closing basis below the 3T line and the T line, so nothing too exciting just yet from a long view. But candlesticks often provide you kind of a front run on trend change or trend continuation or whatever. In this case, the short-term downtrend we've been in since that doji star last week. This could very well have been an important reversal day, as illustrated by this bullish hammer. And obviously, if we start closing, well, ideally start closing above the T line, but more importantly, just start having higher closes and just start trending up on a short-term basis, that'll be good signs that possibly, and I'll just go back to the chart with the wave patterns on it, that possibly this wave count will be out of play, the bearish scenario won't take place, and we'll be looking at the triangle wave count. That'd be my preferred count in that case. But it's still too early to have any confirmation as far as wave patterns. So we'll just keep it real short term, rely on just our short-term trend following techniques with the T-line, and then obviously daily patterns that are put in with candlesticks. We'll just rely on those as well. So very, very short-term, looking a little more bullish here. We'll see how tomorrow's session and the rest of the week plays out. I haven't made any adjustments to my position. I still just have those 100 out-of-the-money calls, 275 strike, May expiration. And they actually gained some value today, obviously, with this coming up like this. So I'll be inclined to just leave them alone until the chart gives me a reason not to. But other than that, I haven't opened any other positions. So just had a nice quiet day and relaxed a bit. Sometimes you need to do that. Slept in, caught up on some sleep. Felt great, actually. Okay, let's check in with the Dow Jones Industrial Average. And let's have a look. So the Dow put in a similar bullish reversal candlestick. Almost a double bottom there. So we'll see how that plays out. Very similar, obviously, to the S&P 500. NASDAQ Composite. Again, we have this reversal candlestick with the long lower shadow. And there's no other differences to point out, really. And the VIX. So the VIX, definitely some rejection of the VIX trying to get up there. And the VIX kind of had a bearish reversal candlestick, which is obviously inversely correlated to the indices having their bullish day. So really, the VIX, you're just going to see it largely trend, opposite to what the indices are doing, going down if they're going up, and vice versa. But what we're really looking for, in my opinion, on the VIX, is we're just trying to see if the VIX breaks any significant resistance levels, which it's pretty far away from doing at this point. The resistance levels will be up here, around that $25, $26 point on the VIX, or I don't know if you want to call it dollar, 25, 26 point on the VIX. And right now, on a closing basis, we've closed it under 18. So there's still just nothing threatening going on here on the VIX at all. And okay, I guess I'll just wrap it there. Not a whole lot to say other than that. Hope everyone has a good rest of their evening. Serial Trader signing off.